Now, we've got a discussion about what happened yesterday with Uber and Lyft. Obviously, you knew that midday, Lyft came out with an announcement saying that they were going to suspend RideShare in California. And it seemed like within an hour, they came out with a judgment, and where basically their judgment was in their favor regarding an injunction against the companies, the state appeals court. That doesn't mean they're out of the woods yet, but so far right now, it looks like they've got kind of a stay and an ability to do their business as they were doing it in California. All right, let's bring everyone back in. Now we've got the S&P unchanged, the NASDAQ up 0.5%, about 62 points. The Dow Jones up 0.3%, about 80 points, and the Russell down about 0.8%, about 12.5 points to 1551. Now, let's bring back in Sean Cruz and Miss Evelyn Baker to the show, who's going to give us some her take on social media and what she's hearing about Uber and Lyft. Welcome to the show, Evelyn. Thanks for coming on. What is social media saying today about Uber and Lyft? I'm sure it's buzzing.
Hi, Kevin. Right, you're exactly right. Social media definitely is buzzing about this latest news with Lyft and Uber. And like you said, Lyft and Uber will be able to continue their operations in California while the court considers their appeal. But the big question coming out of California right now is whether or not independent contractors or these gig economy workers or app workers, as Lyft and Uber have been calling their drivers, should they be considered employees? And there's a huge divide right now on social media. But I want to go ahead and introduce this first tweet that I found. And this Twitter user asked if anybody knows of any good taxi services. Hashtag Uber, hashtag Lyft. I mean, Uber and Lyft haven't yet suspended their operations, but people are already looking in advance as far as, what are we going to do? What are these California and Uber and Lyft users going to do if these services are no longer available in their state? A lot of people have come to rely on them, as an alternative to public transportation or driving their own car, as well as, safety hazards and coming home from a bar with Lyft and Uber rather than, driving intoxicated. But I want to go ahead and open up our next tweet that I found as well for you guys. And this one is asking whether or not people are going to still use the Lyft and Uber services after the rates go up. And this is a really popular question that I'm seeing on Twitter. And the Uber CEO actually addressed this concern in a New York Times opinion piece that he wrote. I believe it was published on August 10th. And that's the Uber CEO, Dara Khosrowshahi. And so he said that if drivers do become considered as employees, then Uber is going to be able to only hire a fraction of those drivers and only operate in a fraction of states, which will inevitably cause their services to increase. So, Kevin and guys, my question for y'all is, if these services do increase, if Uber and Lyft do have to consider their contract employees as employees with those full-time benefits, is that how big of a deal is that going to be a hamper on those businesses as far as when rates go up?
Sean Cruz, you opinionate first on this, and then I'll follow up your thoughts.
Yeah, so I think it's, I wouldn't call it an injunction. I'd call it more of a stay of execution. I think one thing, though, I don't think California wants to see Uber and Lyft just leave. I think there'd be a massive backlash from the electorate in that state. My thing is, why don't we just get this over with and, let California do what they're going to do, which at the end of the day is probably just going to tax it more. Say, fine, you can keep them as, contractors, but there's now a tax that we're going to add on that or something. That's probably how they'll end up resolving this. But I think, right now for Uber and Lyft, it sort of shows the how much value and how much of their business model is sort of built around this whole concept of they don't actually have the employees. They're contractors, sort of third parties. They're really just more arranging the pickup and drop off. So I think for Uber and Lyft, it's going to have some pretty big implications, because you have to assume whatever remedy they come out with they're probably going to come out with in some of the other states where they have a pretty high amount of their services and revenue coming from. As if you think about the really big states where they operate, a lot of those states are now coming into some budgetary issues, and they're going to find ways to fill those budget gaps. And if they see California able to do something, put some sort of a tax or change things around for them, so at the end of the day, it just generates more revenue, I think you're going to see other states sort of adopt that model or some version of it. So that's why I think the big risk is here. And these two companies, everyone's been focused on cash flow. And so this is something that is going to directly impact cash flow at the end of the day for these companies. That's why I think it's such a big deal.
All right, Evelyn Baker, I want to thank you for coming on the show as always and commenting and informing us on what's going on social media. And now I want to bring in Mr. Landon Swan, co-founder of LikeFolio.com, because Landon, how much showtime do we got? I think we could talk about this for the next 2 or 3 hours if we wanted to, but try to break down for us what LikeFolio is reading on social media about this, because like I said to Evelyn, it's got to be absolutely humming.
Yeah, I'll try to leave my personal politics out of this if I can, but the social media data is pretty interesting. I know I've got a lot of opinions. I'm keeping them close to my vest right now. But no, it's incredible what we've seen with Uber and Lyft during this, this quarantine or this pandemic. This is the last thing that they need right now. I think that Uber has about 9% of their revenue comes from California. Lyft is about 21%. So this would be a massive hit to them. I think that they would have to pull out or at least threaten that. And when we look at the social media data on just usage, it's incredible to see how bad they were doing going into this. I mean, you look at the cut that happened during the pandemic, either on the company level or across how they're using it. We can see that, there's 3 different ways primarily that people use these ride-sharing services. And you can see here, travel, entertainment, or work. And obviously travel was the big one. And what we mean by that is when, you're getting up to or from the airport or your hotel, or you're going on vacation and you're using Uber or Lyft on those. Obviously, that took a massive hit, down about 70%. It's starting to come back a little bit, which is nice. But still, it took a massive hit initially. And entertainment, and that's restaurant and bars, as Evelyn was talking about, trying to avoid drunk driving or just being responsible. It's a very good thing that people are using that. But if you're not going out to restaurants and bars, you're not calling Uber or Lyft. And then, of course, the work from home movement has cut the office trips down quite a bit as well. So all 3 of those are down tremendously, getting a little bit of bump back on some of them, but very bad situation going into this California ruling. And you can see when you look at the companies on a side-by-side level, just the total mentions of usage of Uber versus Lyft. The demand is actually dropping quite a bit as well, obviously from all these different use cases. I believe that the demand usage for Uber is down about 40% year over year. Lyft is down about 66% year over year. And again, Lyft has they have more exposure, about 2.5 times exposure to California that Uber does. And so between the two, I'd say that Lyft is definitely hurting a lot more during the last 6 months or so. And you know what? I did a little show prep. I added up all my ride shares. This is crazy. From the 6 months prior to quarantine, I spent about $1,400 on ride shares. And in the last 6 months, I've spent $53 on ride shares. So, I'm just one of many, many people that have that story where ride share costs or expenses are going way down. So that means revenue for Uber and Lyft is way down.
Yeah, Landon, this is just going to be one of those stories that keeps evolving because, California rules their state differently than most other states do, right? They are highly regulated. They are kind of aimed at one type of electorate that may benefit from some of this, but what they don't realize is, they make the assumption, right, that Uber can just pay a little more from their profits to pay these employees benefits, and they can pay healthcare and pay overtime and pay this. And what they don't realize is Uber and Lyft make no money. They hemorrhage cash and have to figure out, how they're going to get to higher prices and become profitable. And this for them is a death blow. for them. And if it spreads to other states, it's a death blow for Uber and Lyft. That being said, this appeals court victory by them, the stock was up, I believe, 6% yesterday. It had a big move in the stock because this means, and remember, this has come up before and it was negotiated away, and that may happen over time. Sean Cruz, I want to get your thoughts on this and Landon's as well. How does Uber get over this hump? I mean, doesn't everything that we're talking about here simply lead to one thing, and that's higher prices for Uber?
I think it does. And so, I mean, yeah, I think I'll leave my personal opinion on this situation to the side as well. But I think it is one thing to think about here. And it is, what's the crutch maybe, to Landon's point, I'm not taking nearly as many Ubers myself, but I'm getting a lot more of my food delivered. And I do use Uber Eats sometimes. I used Uber Eats this morning. But I think the food delivery space and the delivery space is much more fragmented. And so what can that mean? I think the way the industry will respond to this, and let's just assume there is going to be something, even if they kind of figure out some midpoint, I think it's just going to end up being a tax, and they kind of let them continue to operate as is with higher taxation. But I think that what you want to then expect the industry response, or the way industries usually respond, is they consolidate. So I think this maybe could lead to an acceleration of a lot of the consolidation we've already seen going on in this space. I think that's the one way, Kevin, to your point about needing to be able to get higher prices in a fragmented, highly competitive industry. It's very difficult to get pricing power. So consolidation is probably the way you respond to that.
Look at you, Sean, going all microeconomics 101 on us right there. But Landon, I have one last question for you, and that is this. This is a wildfire, isn't it? Because what's going on with Uber and Lyft, I'll give you three more companies' names. DoorDash, Postmates, Instacart. Isn't the same exact thing going to happen to these companies down the road that's happening to Uber and Lyft now, Landon?
Yeah, and you know what? This is sort of a test run, I think, for California. And just to kind of make a prediction, I don't think that it's gonna hold up. I'm with Sean on this one. It's a bit of a poker game, California raised, and I think that Uber and Lyft are re-raising now, saying we're going to pull out. And the electorate at California, they cannot have that. If this comes down and Uber and Lyft pull out before November, that there's going to be a lot of people's jobs on the line as far as a state legislator. And so you can see massive pull downs in Uber and Lyft here. They're both obviously reeling already, but California, I think, is making a bit of a mistake here. I'll go ahead and say it. I mean, you did some fantastic tiptoeing, Kevin, on earlier around the politics of California. So I'll give you credit for that. But I think that they're putting themselves in a position where they think that Uber and Lyft have unlimited money and they're going to pull from them as much as they can. But like you said, they're losing money. They can't do this. And I think that if those companies are smart, they will pull out of California. And hopefully they will for if this comes down to that, for the other Instacarts and Uber Eats and Grubhub and all those. I think that's really important. And, just to Sean's point, and that's a great one that he made about the food delivery. Uber has about 70% of the rideshare market versus Lyft's 30%. But if you look at their market caps, Uber is worth about 5 times as much. And that's because they've diversified. They've got a lot of potential income streams besides just ride sharing. So I love them long term. I think that for a while, LikeFolio was talking about how Lyft is cutting that lead down, but Uber's doing a really good job of diversifying and broadening their reach. And so once this is past them, and I think it will go past, I don't think that California wants them to pull out, then I think that Uber's the long-term winner here, but things need to get back to business, and they absolutely cannot pass this, or else it's going to be really tough because, like you said, it will just spread to many other companies and potentially other states unless they put their foot down. Uber and Lyft put their foot down in California and pull out. So I think it's going to be fun to watch.
All right,
I hate to be in California right now and have to worry about how I'm going to get my rides, but definitely interesting as far as a political discussion goes. That's for sure.